How's it going, everybody? I'm back with another dividend investing video here on M1 Finance. This is my account. As you can see, if you watch my other videos, they're up a little bit in my dividends. However, my market gain is dropping a little bit if you check out the 1 week here. We're down 1.72% or $107.94. The thing I want to cover in this video is what's in my portfolio. I think I'll do a few different videos on this just so they're not super long and boring. But we'll start with each sector that I have it split up in, and we'll cover that. And then I also want to talk about how I learn about investing and things that I look up and watch. So we'll kind of get into that as well in the account. On the day I'm up, week I'm down, month almost about even. And then as you can see, I haven't held this M1 Finance portfolio for very long, so the quarter, year, and all time are all the same. Um, so basically, this is what the main platform is going to look like. You scroll down, and here's my portfolio and what I have it divided up into. I have it divided into these 7 different sectors, and for now, while I have a smaller account, I'm probably going to keep it like this just until I get this built up. If you watch my other videos, you'll see that I had a Robinhood account that was transferred over, and I was obviously more heavy weighted into consumer. And I didn't really have a whole lot in energy, industrial, or any of these other sectors. So the goal right now is just to continue to put money in and receive dividends to kind of get these target allocations back to equal. Obviously, I'm almost double here in consumer. I want it to be around 20%, but it's sitting around 39.7% right now. Likewise, with real estate, I'm underweight. It's at 15, and I want it to be at 20. Finance is almost there. Healthcare and telecom both at 10. Industrials 6.7, 3.2. So we'll just kind of jump into consumer. I have a total of $2,452.01 invested into this sector. Currently up 9.15% on it. So we click over to it. Since I've held this account, I've received almost $16 in dividends from it. And we scroll down, and these are my holdings. Okay, Coca-Cola, currently $522.11, down 4.3%. Currently hold almost 12 shares, 11.76 shares of Coca-Cola at an average price of $51.96 and is trading at $44.36. When we go back, we'll jump into Yeti. Yeti is not a dividend-paying company. The backstory on why I bought this company is that one time my girlfriend and I were in a store. She's a big fan of Yeti products. She buys tons of them. We have multiple different Yeti coolers and you know, cups and fishing gear from them and whatnot. Also, we actually named our dog Yeti. So we're pretty big personally. We personally enjoy this company quite a bit. I actually jumped into it at a low price. I'm up 64.3%. I bought in at $27.28, and literally right when I bought that, the company jumped up to around $31 or $32. And I just decided to hold on to it. I didn't want to sell and take profits or anything. But then we look, let's see, at the dip here. Let's see where the dip would be. Cruising up, May. Bum, bum, bum. Okay, so this isn't going to show the company. We'll jump to the company and see. 6 month. So yeah, I bought it a while ago. Let's see. I think I bought it around here in June or July. So it jumped right up, came back down. Really bumpy ride. I was back positive in February, and then everything hit and this company tanked. I mean, I lost double. I was down 50% like instantly. And then I decided to hold on, didn't want to let it go, just kind of figuring it out, and it's just right, boom, 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 right back up. Now we're currently at 42.72. So I'm up quite a bit in this company, and I'm pretty happy that I didn't get rid of it. Ford Motor Company is the next one that I have in here. Now, Ford, I'm in a love-hate relationship with them right now. I have a pretty good amount invested into it. I'm up 16.25% just in this portfolio. However, I'm actually down if you look at my average share price to what it's trading. And the reason for that is when Ford was up over $10, 10, 11, $12, I was kind of slow on buying it, but when it dropped around 9, I would buy a lot of Ford shares. As you can see, I have 53.5 shares of it. And when it, obviously they've suspended their dividend, which kind of bums me out, but I don't think Ford is going anywhere anytime soon. I think they'll ramp up their dividend back again once the economy starts opening back up, and I'll start being able to collect on those dividends yet again. So as for now, I lowered my allocation of Ford. I was up around 15% up here with Coke, but I lowered it to 5% because I don't want to put any more money into it, but I'm just going to hold on and wait. So the next one we got is GOF, Guggenheim Strategic Opportunities Fund. Now this one's just a dividend-paying fund that I bought. It's an ETF. I bought it quite a while ago, and as you can see right now, I'm down just based on, not talking about this, but based on my average share price to the price of the shares that I bought, I'm down a couple bucks on it, but I own 17.3 shares. And I really like collecting the dividend on it. I really wish M1 would add something here that showed what dividends I've collected, separated out other than just a total. But as you can see, I've already got $6.30 from this company just from my M1 Finance in the past few months. We go back, and then of course we've got Disney. Disney I own 2.3 shares for an average price of $127 since trading at $111.52. Disney is a great company. I love going to Disneyland. I love Disney movies, all their products and everything. And I think, with Disney Plus being around, that this company is going to be definitely a great dividend company down the road. So we'll jump back. Walmart. I've got 2.17 shares of Walmart for an average price of $117.99. It's currently trading at $119.06. The dividend yield of 1.8%. Everybody knows what Walmart is. According to this, I'm down a little bit, but Walmart's a great company to own. It's a good dividend payer. It's stable. It's not going anywhere. Back. AWF is another ETF I own, AllianceBernstein Global High Income Fund, another dividend payer. This one pays, I believe it's like 12 cents a share. I want to say monthly. And I got in for $11.46, and it's paying $10.10, trading at $10.10 right now. And again, this is kind of the same situation as Ford, GOF, Guggenheim. I was into them heavily in my Robinhood account, but I lowered that allocation in them so that I wouldn't be putting any more money into it anytime soon. Yeti's the same way. And then we get down to these ones. And I don't have a lot. Procter & Gamble I own, and the thing that blows me away about this company is this consumer staple. I own just over one share of it for $122.27, and it's trading at $117.66. But the thing that blows me away about this company is that I live in Arizona, and there's a plant down in the Phoenix area for Procter & Gamble, and I was like, yeah, it's a consumer staple. I'm sure they're in a lot of stores and whatnot. And if you go look at a lot of these like cleaning products and necessary home supplies that people buy, you turn around to the back of the bottles, and a lot of the times you're going to see Procter & Gamble. You're going to see this symbol sitting on the back of that bottle because the company makes a ton of stuff. And it's crazy to me because I'll go through Home Depot or Walmart or wherever I'm at buying things, and I'll check these just for fun, and I see Procter & Gamble on so many of them. So I was like, it's kind of a no-brainer to buy this company if they're selling all of these products in these stores. I need to be invested into it, and so that's kind of why I jumped into here. So next one. Now these ones I don't have a whole lot of money in, so I'm not going to jump into them, but we got McDonald's, Home Depot, Costco, Starbucks, and Pepsi. Now, the thing that kind of sucks about having so much into these top companies here is that I tried to add Pepsi with an allocation of 12%, but M1 Finance isn't going to put any more money into my consumer pie because I'm overweighted in it. And so once the other slices catch up, then we can start putting money in, then I can start buying Pepsi. But as you can see, I have an allocation of 8% for Starbucks, and I only have 0.6% in the company. Same with Costco, 0.7 and 0.7, and McDonald's and Home Depot. So kind of a bummer that there's not a whole lot into these. But like I said, the more money I put in, the quicker my account will even out, and then the quicker that I can actually start investing heavily into these companies and growing their value as well, and collecting the dividends that they pay out. So future videos, I'm probably going to jump into these other ones and kind of go over those. Probably combine these smaller ones into one, but that's kind of my consumer pie, my consumer slice, if you will, in this portfolio. So as you can see, I've got pretty solid companies in here, and we're kind of just hanging on, collecting dividends, and continually investing. So one thing I do want to cover in this video is how you learn about investing. And a lot of people kind of jump on YouTube and watch videos and stuff, but another good aspect of it is doing research on your own. Going to Yahoo Finance or Investopedia or Seeking Alpha or any of these other websites that you can do research on and figure out, what am I looking at here, or what is this? Because if I jump in and I click on Coca-Cola, right, and I go to the details. Okay, when you first get on here, what does all this mean? What's the market cap? What's the PE ratio? What's the dividend yield? What's this graph mean? So there's a lot of things that you can get into and try and figure out what these things mean. You can see the different sectors in it and see what you're kind of looking at when you pull these things up. So it's important to come in, and I use Investopedia quite a bit and Yahoo Finance, just to figure out kind of the lingo with dividend investing or just investing in general, so that I kind of have a better understanding when I go to look at these stocks. And then on top of that, I'll use Seeking Alpha when I actually check out a company and do an analysis on a company to see if it's something that I want to invest in. So with that, we'll jump over to Investopedia, and I pulled up this article, Guide to Dividend Investing, by James Chen from May of this year. So this is just going to give you a brief overview of what a dividend is and how they work. So it's important to read through these articles and do research to figure out what these different aspects of investing are. And Mr. James Chen wrote on this, what is a dividend? A dividend is the distribution of a portion of the company's earnings decided and managed by the company's board of directors and paid to a class of its shareholders. Common shareholders of dividend-paying companies are typically eligible as long as they own the stock by the ex-dividend date. Dividends may be paid out as cash or in the form of additional stock. So reading this, there's some things you may ask. You're like, okay, distribution of portions of companies decided and managed by the company's board of directors. Own stock by the ex-dividend date. So what's the ex-dividend date, right? So then you can come up here and check it out. Ex-dividend date. Search that. Skip through the ads. Ex-dividend date definition. What is the ex-dividend date? The ex-dividend date, or ex-date for short, is one of 4 stages that companies go through when they pay dividends to their shareholders. The ex-dividend date is important because it determines whether the buyer of a stock will be entitled to receive its upcoming dividend. So you can see that going through Investopedia, it's important to check these things out and understand what we're looking at, what we're reading. And basically, I'll go through, and if I don't know what something is, I'll come in and read these articles and say, okay, it must be approved, blah, blah, blah. Okay, that's what a dividend is. Basically, a company earns profits, and they have enough extra money that the people that own shares in the company, they pay out. It's a profitable company. They send the money to their shareholders that they earned throughout the time frame. And a broad definition of ex-dividend date is basically the cutoff of when you're eligible to earn a dividend of a company. So dividend payments are incredibly important in investing, and there's a lot of controversy, and a lot of people say, I forget the guy's name, but there's a video on YouTube that he talks about the dividend irrelevance theory. It says that dividends don't matter. Um, I completely disagree. And even if financially they're not a huge impact on my portfolio now, it's the morale boost that I have my M1 Finance linked to my phone, so it sends me alerts, notifications, and whatnot. And when I wake up in the morning and see dividend activity, you received a dividend from one position or from 4 positions or anything like that, it's a motivator for me that I can go in and I'm earning money while I sleep. Literally while I sleep. I wake up in the morning and have that notification on my phone. And so I want you guys to think about what your goals are and what you want to achieve in this, and really start to wonder, I need to start doing research, start investigating all these different aspects of investing. Start learning what the PE ratio is, or what the dividend yield means, or the market cap. Start figuring these things out with these companies and with investing, and you're really going to be able to blow up your portfolio because you're going to understand a whole lot more about investing. So anyway, I think I'm going to end the video here. If you guys want me to go in depth on different things about investing and different topics, or different terms and different aspects about investing, then drop me a comment. Let me know what you think. Tell me what you want to see. Tell me what you want me to talk about, and I'll get those videos out to you. Moving forward, if you can just drop me a like for this video, I'd really appreciate it. It really helps me out, and it shows me that I'm on the right path of what everyone wants to see here on YouTube. If you enjoy this content and you're looking forward to seeing more from me and hearing more from me talking about my account and what I'm doing here, and just investing in general, then please subscribe and hit the notification bell. I plan on getting at least one video out every week, maybe if not more. So I'd really appreciate that support. So anyways, until next time, we'll see ya.